high-yield savings make your idle money work harder in 2026? What if the money sitting in your savings account could earn more interest without you actively working for it? That's the basic idea behind a high-yield savings account. Instead of simply leaving your money in an account without comparing the available interest rates, you can look for legitimate savings products that offer a relatively higher rate while still providing appropriate access to your money. The first thing to understand is that this isn't a get-rich-quick strategy. You're not going to turn Rad 10,000 into Rad lakh overnight just by finding a higher interest rate. The real advantage is making sure your idle cash isn't earning less than it reasonably could, while keeping your money in a suitable and relatively accessible place. For example, imagine you have 1,000 that you don't need immediately. If one suitable savings option offers a lower rate and another eligible option offers a higher rate, the difference in interest over time can become meaningful. But you should never compare the headline interest rate alone. Check whether the rate is actually available to you, whether there are minimum balance requirements, whether the rate is promotional, whether it can change, what fees apply, and how often interest is credited. Also understand the safety and regulatory framework of the institution. In India, bank deposits have specific protections and rules, including deposit insurance subject to applicable limits and conditions, so it's important to understand what type of account you're opening and whether the institution is properly regulated. Don't confuse a savings account with an investment. A savings account is generally designed for storing money and earning interest, while investments such as stocks, mutual funds, or REITs carry different risks and potential returns. One of the best uses for a suitable savings account can be your emergency fund. An emergency fund is money kept aside for unexpected expenses such as urgent repairs, temporary income disruption, or other financial needs. Because emergencies can happen without warning, keeping this money accessible can be more important than chasing the highest possible return. Another smart habit is separating your spending money from your savings. If all your money sits in the same account, it can be easy to spend it without realizing how quickly your savings are disappearing. A separate savings account can create a psychological barrier and make your progress easier to track. You can also automate transfers. For example, after receiving your salary, you could automatically move a predetermined amount into savings, assuming your bank supports that feature. This turns saving from something you remember to do into a system that happens automatically. AI can help you calculate different savings scenarios, compare hypothetical interest outcomes, build a monthly savings tracker, and estimate how long it may take to reach a financial goal. But always verify actual interest rates, fees, terms, and regulations directly with the financial institution or official sources, because those details can change. Another important point is inflation. Earning interest doesn't automatically mean your money is increasing in purchasing power. If inflation is higher than the effective return after applicable taxes, the real value of your money may still decline over time. That's why savings and investing serve different purposes. Savings can be useful for short-term goals and emergencies, while long-term wealth building may require a broader financial strategy based on your goals and risk tolerance. And never fall for fake websites or social media accounts promising unbelievable interest rates. If someone guarantees extremely high returns with no risk, treat that as a major warning sign. Verify the institution, website, registration, terms, and payment process before transferring money. The goal isn't to chase the highest number you see online. The goal is to keep your emergency and short-term money somewhere appropriate, reasonably accessible, and capable of earning a sensible return. If you already have money sitting idle, learning how savings products work could be one of the simplest financial habits to improve. Start by checking what you're currently earning, compare legitimate alternatives, understand the conditions, and make a decision that fits your financial needs. If you enjoyed this video, follow for more personal finance tips, passive income concepts, investing basics, AI tools, online business ideas, and practical ways to manage your money smarter.